Hello again, this is John Piper, continuing my video series of The Way to Trade Better. This is video 6, now on to section 2, trading systems. I believe trading systems are essential for traders, especially starting up. You need to have a set of disciplined rules so you can see what you need to do. It's all too easy when you get to the markets to just start trading away emotionally, instinctively, and just see your money disappear. I mean, the brokers are after you, as it were. They have this 90-90-90 rule. 90% of traders lose 90% of their money in 90 days. The whole purpose of being a trader is to avoid that trap. You need to last longer than 90 days to learn the business. And if you follow the guidelines I'm setting out here, then you should most certainly do that, as long as you of course can control your own psychology. I mean, for example, some people are fanatical gamblers. They just want that hit, and if that's an issue that you have, then it's something you need to sort out if you wish to remain in the markets for any length of time. Before we go to the next section, I want to say a few words about one strategy I use, which is to write options, index options, normally FTSE or the DAX. When you write a call or a put, you take on board, you receive the premium, but you're exposed to the market fully. The market can move against you as much as it wants to go. Now this seems to fly in the face of what I just said about risk is strictly controlled. However, if you adopt a hedging strategy, which is what I do, that way you control the risk. So it does in fact fit into that parameters. I really like writing options because you can make money whichever way the market goes. I mean, you write calls, you want the market to fall down. If it does so, you just close the calls at a profit. If it goes up, you start to hedge, and you can still make money doing that as well. Not always. There's no such thing as a system that works all the time. But it's something that I've decided to teach to a few students at the moment. So that kind of trading is of any interest, and get in touch. I'll be happy to tell you more about it. We'll now go on to the 3 simple rules. For any trading idea to work, it needs to pay attention to these 3 trading rules. Cut your losses, run your profits, trade selectively. Trading rule 1, cut your losses. This rule simply means you never lose more than a small or acceptable sum. You get to choose exactly what is meant by these terms. You choose what is small and acceptable to you. The mechanism for this seeming miracle when trading is something called a stop, whereby you exit a position at a predetermined point if the price goes against you. An alternative is to trade in smaller size so that a total loss, i.e. the instrument in question goes to 0, would still be acceptable. However, most traders want the gearing, and gearing of course is a double-edged sword. When buying options and trading binary options, also known as binary bets, the total purchase sum is a total risk. When writing options, matters become more complex, and there is a large section on this in The Way to Trade, and of course I just mentioned something about it earlier on in this video. Trading rule 2, run your profits. The first rule keeps you safe and ensures you live to fight another day. After a losing trade, or even a series of losing trades, that can and does happen. The second rule brings home the bacon. Most traders don't lose through making too many losses, they lose through not making hay when the sun is shining. Most traders never give themselves a chance because they take profits too early. Small losses and small profits equals zilch. We need to avoid this trap, and if you are to win and break into a world of abundance, psychologically you need both courage and fortitude. Don't allow fear or any other negative emotion, for that matter, to create a trap and then dictate your actions. Running profits does not mean you must always leave positions open in the hope that the market will keep going that way forever. It's perfectly okay to use profit targets, for example. A profit target merely means you take profits at a predefined point. This is something that many systems do automatically, as does my Zeitgap system, which I'll be explaining in Appendix 2 once we get up to the video of that particular appendix. Such a profit target can be fairly close. The idea is that you let the market reach that point unless you have a valid reason for bailing out earlier. Trading rule 3, trade selectively. The third rule adds the icing to the cake. If you only take the best trades, then you achieve a double whammy. You get better profits and you eliminate a portion of losers. I have a number of ways of filtering out the trades I do not want, whilst limiting losses when trades go against me. We'll be looking at this later on. The 3 trading rules are fundamental to your success, and we are going to apply them as we go through this section. It's interesting that there are 3 rules impacting on your trading systems, but also forms part of your money management system. They are therefore important to 2 of the 3 factors of the trading pyramid, your trading system and money management. They then feed through to your psychology, the 3rd factor, as to help you keep you relaxed and in control. In the next video, we're looking at 2 trading systems, and again I'll say au revoir and speak to you again soon.